Hello everyone, I'm Amrita Gurung, and as a partial requirement for the assignment of Finance for Business for the achievement of Masters in Professional Accounting degree at Holmes Institute Australia, we, the group of 4, prepared a report on research on Australian financial market and capital budgeting analysis. And this video is a representation of the summary of our work. Let's start with the introduction on the topic. The topic deals with different parties in the financial market and their roles in facilitating different functions in the financial markets. Just like most of the countries, Australian financial market comprises of 4 key financial institutions, which are commercial banks, investment banks, insurance companies, and investment funds. Now, let me give a brief explanation on aforementioned types of financial institutions. Let's start with commercial banks. Commercial banks are the type of banks that have direct dealings with the businesses and help these by aiding them financially, whereas insurance companies are the ones that offer various products for corporations and individuals. Likewise, investment banks are the ones that are the facilitators that offer secure means for business transactions. And lastly, investment funds are the funds that aid the investors by acting on their behalf for making investments like purchasing stocks and using the securities with funds provided by the former. Now, here are some of the financial institutions running actively in Australia, and we've chosen Clearview Wealth Limited, Bank of Queensland, and ANZ Investment Bank as examples. So we've chosen Clearview Wealth Bank as an example of insurance company in Australia, Bank of Queensland as an example of commercial bank in Australia, and ANZ Bank as an example of investment bank in Australia. So the tables basically shows each of the financial institutions' descriptions and market worth as per listed in the Australian Stock Exchange, ASX.
Hi everyone, my name is Shekhar Gautam. I'm here to present part 1.2 and 2.1 of our group assignment. Part 1.2 comprises of the 3 components of financial management, and part 2.1 comprises of the companies listed in the Australian Stock Exchange. So let's get started. In the first part, we talk about the 3 main components of financial management, namely capital budgeting, capital structure, and working capital. These 3 can be defined as seen in the PowerPoint, where capital budgeting is basically the process of identifying the proposed fixed set of assets purchased and the rejection of certain assets. The capital structure being the distribution of debt and equity in a certain proportion which the company assumes suitable for itself. And the third one being working capital, which is the capital for the business that is required to perform certain operations to manage the assets and liabilities. Part 2 comprises of the advantages of an Australian Stock Exchange listed company. Some of the advantages are it can raise capital initially, the company can improve its public image, the listed company can increase its valuation, and so on. Here are some of the prerequisites. The first one is the minimum number of investors or shareholders is required to be 300 for an amount of $2,000 and the free float is 20%. There are 2 tests involved, profit test and asset test. And the third one is if the company is present on any other foreign exchange, it has an option to be listed as either an ASX company or as an ASX foreign exempt company. And the final one are the listing procedures for the ASX listed companies. So some of them are the panel that advises are generally experts referred for advice. After the previous step is carried out, the marketing activities are performed for generating interest among people like meetings, roadshows, etc. Processing is done for the application by the ASX, after which the approval requires about 6 weeks post-review, and the closure of the offer while the allocation of shares is completed and the trading is started. Thank you.
Hello everyone, my name is Bharat Pandey. Today I am going to give group presentation of finance, where the fact finding of requirements on financial advisory service registration in Australia. The requirements are financial advisory register, where the registry is managed by ASIC and it is published on the Money Smarter website. Another one is detail regarding the contents and updating the register, where the advisor who have the authorizations are listed in the register. These advisors are all licensed and they have a specialization of the registration, where ASIC managers are accountable for the documentation of the details about these advisors. Another one is the information provided documents on the register. This is information provided on this register about this advisor. This information include their name, training information, qualification, work history, and their expertise. Another one is financial products that are relevant for the advisors, where there are derivative products, foreign exchange products, insurance products, retirement benefit scheme, carbon credit, deposit scheme, etc. Another one is professional standard that is applied for the advisors, which are qualification standards for approval, ethics and the compliance, and to participate in the development of the professional area with the need to serve at least 40 hours annually. Thank you so much.
Hi everyone, I'm Prasanga Dungil. I'm going to represent part 3 of our group assignment, where we have done risk analysis and project evaluation process using sensitive analysis. So let's begin. So the comparison of net present values is done here through 4-step process. First, we have organized the data as given in the case study. Then we have calculated base net present value to compare it with the changes in net present value due to the changes in its value drivers. Then in step 3, we have recalculated the net present value according to the changes in value drivers. In first case, we have calculated net present value according to the change in unit sales, followed by case 2, 3, and 4 respectively. That is, unit price decrease in case 2, variable cost increase in case 3, and fixed cost increase in case 4. In step 4, we have compared all net present values to identify most sensitive value driver, from which we have concluded the net present value is more sensitive when the unit price decreases by 10%, and it's least sensitive to the 10% increase in fixed cost per year. To conclude the overall assignment, financial markets are essential factors for the growth of nation's economy, as well as it is needed to help the investors to invest in right sector or market. So every country have specific regulating bodies, like Australian Stock Exchange in Australia, to encourage transparent and fair trade practices. Thank you very much.